한때 사막의 신화로 불리며 승승장구하던 두바이. 금융위기의 직격탄을 맞으면서 금융허브의 꿈을 접는 듯했습니다. 그러나 최근 중동 지역의 정정불안과 함께 오일머니의 집결지로 부각되면서 또다시 화려한 부활의 날갯짓을 하고 있습니다. 이데일리는 레바논 중앙은행 부총재와 경제통상산업부 장관을 지낸 중동 지역 최고 경제 전문가인 나세르 사이드를 초대했습니다. 신흥국 중심으로의 경제질서 재편, 이에 따른 한국의 동북아 금융허브 실현 가능성을 집중적으로 들어봤습니다. Thank you for joining us. It's great to have you today. My name is Junki Lee, the reporter in Mena의. So we have a good number of questions regarding the Korean economy as well as world economy. Many experts consider the unpredictable geopolitical risk is most dangerous to Korean economy forecast. So please advise how we do manage this.
Well, Korea, of course, is a very open economy. You are dependent on trade. Much of the growth and the success in the growth has come from being export-led. One should not neglect that. At the same time, it means that you are exposed to risks, and there are many risks. Energy prices, food price inflation, geopolitical risks, such as what's happening today in the Middle East and North Africa. To me, there is a lesson in that Korea needs to become more engaged at the international level. You need to be more active in international organizations. Also, perhaps more active in terms of what you do at a regional level in Asia itself. Korea has matured, and you should get the benefits both of your strong economy, but play a more important role in the world itself.
As you know, New York and London have been the financial hub of the world economy over several decades. So, do you think this will continue or not?
No, I think the financial crisis that we've seen since summer, in fact, 2007, and which continues to today, has meant that the old model that we've had, where London and New York on the one side were the hubs, were the centers, and other countries and financial markets were the spokes of the wheel, that model is broken. I don't think it will come back again. There are many reasons for this. First, the world's economic geography has shifted towards the emerging markets. Today, if you look at Asia, it represents, at purchasing power parity rates, 40% of the world's output. Europe represents another 20%, the US another 20%, and the rest is distributed across other countries in the world. That shift in world economic geography is also being associated with a shift in the world's financial geography. That means we need to move away from this old model, which is the hub-spoke model, towards what I call a spider web model. By spider web model, I mean many regional financial centers, but particularly more regional financial centers in the emerging markets. So Dubai has emerged as a regional financial center. Shanghai is emerging. You can also emerge as a regional financial center. What we need is more links between these regional financial centers in the emerging markets. So this is the spider web. And what we need is greater development of the capital markets, of the financial markets in these regional financial centers, so that we are not dependent on capital flows coming from London and New York. There was enormous concentration of capital within London and New York. This meant that they themselves became a source of systemic risk for the international economy. So in the next few years and the next decades to come, I think we'll see two things happening. New currencies will emerge as part of the international financial architecture and monetary system. There will be less dependence on the dollar, and the Chinese renminbi will emerge as a world currency. So I think we are moving towards a world in which you'll have dollars, euro, renminbi, and as well some yen in there. It may well be as well that the Gulf countries will also emerge with a common currency that can emerge as well as another world currency. Associated with this is more regional financial centers. So I think the architecture of the international economy and international monetary system is changing, and the old model is dead.
Okay, it's many express opinion that the Asian countries should do monetary and financial integration in regional dimension to protect their economy.
Yes.
In this vein, Korea also has been pushing the financial hub policies since 2003. So what do you think of Korea's role on this?
I think this is a strategic and very important policy decision. We need to go towards greater integration within Asia, and I think Korea is absolutely right in pushing for this. We need to develop an Asian bond market. We need to develop greater relations between the central banks. The Chiang Mai Agreement, for example, is an important agreement, but it is only one of the stepping stones towards greater financial integration at the level of payment systems, at the level of bond markets, at the level of equity markets. I have no doubt that the next Euro bond market is going to be the redback market coming out of China. When China opens up its capital markets, and in particular starts developing its bond market and develops a government bond market and a corporate market, it is clear that it will dominate world financial markets. It is in the interests of Korea to be associated with this, so that you develop deep bond markets at the level of the Asian countries. So you have three countries which have the weight. You have China, you have Korea, you have Japan. If you work together, you can be the basis of a strong Asian bond market and the basis for a strong equity market across the region. So with Hong Kong, Singapore, Seoul, Shanghai, Beijing, and Tokyo, I think you need to build a new future for financial markets. If you do that, it will mean that you will be less exposed to capital flows and volatility of capital flows. You will have better control of monetary conditions and liquidity. So that's why I think this is essential.
Okay, a little different topics in this time. It's been over 3 months since the earthquake and tsunami hit Japan. So do you think this is still creating a violent shake on the world economy? The terrible earthquake with a large loss of human life in Japan is important because, number one, it is different from the Kobe earthquake and disaster, much larger in terms of size. We're talking about losses of infrastructure close to 5% of GDP. It is also in the Kanto region, which is close to Tokyo, and that region produces something like 40% of Japan's GDP. So the impact on Japan has been much stronger. And there have been two types of impacts internationally. The first is the reassessment of the role of nuclear technology. Is it safe? Can we depend on it? Is this the area in which we want to go for energy production? Japan is highly dependent. It's one of those countries which is highly dependent on nuclear energy. So the reassessment happening in Japan means a world reassessment of nuclear technology and its uses.
And I think it will mean that countries will want to go towards more renewable energy and renewable technologies and clean technology. So the impact, I think, will be with us for a long time to come. It will lead us to reassess the safety of nuclear power. For Japan itself, it is, of course, an occasion to recover through rebuilding infrastructure. This is what it did before at the time of Kobe and other disasters. And I think we can expect the same, except that this time round, of course, the shock was stronger than in previous occasions.
Okay, this is about the Islamic bond issues. The Korean government pushed a plan that Korean financial institution would issue the Sukuk bond.
Yes.
Yeah, but however, it's still in the air. We are not sure about the final decisions yet. So, would you explain the present conditions of Islamic financial market and also explain the prospects and strengths of Islamic finance, please?
Well, the Islamic financial industry has been growing very fast over the past decade, growing by 15 to 20% per year. Its size today is about $1.3, $1.5 trillion. So it is not enormous, but it is a rapidly growing market, which has a great deal of liquidity. Islamic finance, I think, is important because it avoids some of the excesses we've seen in some of the developed financial markets. It aims to finance real activity, to finance real investment. It avoids interest. It avoids any financing of criminal activities, drugs, and the like. So it has been viewed very much as embodying ethical principles, which is true, but importantly, it is about the relationship between the financial sector and the real economy. And those links have to be strong. That is the main precept of Islamic finance. The other important element, I think, is the risk sharing. By its very nature, the account holder in a Sharia compliant contract shares the risk with the institution, which means that if you share the risk, you need to know what the risks are. And that means better disclosure by Islamic financial institutions. So in today's world, they have advantages by being much more transparent, and they have to disclose a lot more. For Korea, this is an industry that you should look at seriously and be able to tap. We've had discussions with the Korean government on the issue of a sukuk, and we would be very pleased if Korea were to issue a sukuk. We have proposed that if Korea issues a sukuk, we would have it listed in the TIFC. We are the biggest sukuk market in the world, with listings, for example, from the International Finance Corporation, part of the World Bank. It's a well-developed market. And what Korea could do if it did that, it would be one of the first major sovereigns to issue a sukuk. And I think if it did that, this would be very well received in the markets. And you could use sukuk for financing infrastructure in Korea, or for financing infrastructure projects that Korean companies are developing or constructing. So if a Korean company were doing business in a project in the Middle East, you could issue a sukuk to finance that and enter into the market. I think if that is done, I think it would be, you will find it very attractive, and the market will find it very attractive.
Next one is about the current situation of the Middle East and North Africa. So, do you expect that this situation will impact the world economy in a negative manner?
The developments in the Middle East have already affected the world economy. We've seen oil prices rise from $90 to $120 over a short period of time. So there's been a big shock in terms of the oil price. And of course it has raised uncertainty concerning oil supplies. Libya, for example, has withdrawn from the market. There's no production. Other countries have compensated. Recently, Saudi Arabia has increased its production beyond its OPEC quota. Other countries as well, Kuwait and others. As long as the situation in the Middle East remains unclear, I think there will be a premium on oil prices. So the oil price hike is not going to go away very quickly. Having said that, the developments in some of the countries in the Middle East, I think, are very welcome. They, I think, will move towards countries with much more inclusive economic growth. Part of the problems in countries like Egypt and others were that although they were growing, the growth did not reach the poorer part of the population. So it was not inclusive. There was no trickle down of the economic growth. There was no pull-up effect of people bringing people out of poverty. This needs to happen, and you need to fight corruption and waste. These are important. And therefore, I think we should welcome what is happening in terms of going towards more democratic regimes, towards removing corruption and having more inclusive economic growth, having greater participation of people. The main issue has to do with job creation, and therefore a major effort has to be made both by the countries themselves as well as the international community and international institutions to help job creation in those countries that were affected. This will not happen very quickly, so we have to be careful that we are in a period of transition. This transition will most likely last a number of years. If we look at other countries that have been through transitions, look at Eastern Europe, Central Europe, other countries in other parts of the world, on average it takes 3 to 4 years of transition before you get a new normal situation. So we should not be surprised if the same thing happens in the Middle East, North Africa. To get the long-term benefits of more inclusive economic growth will probably take much longer than that. So we're talking maybe 10, 15 years. So we have to be patient. We have to be strategic in thinking. We have to plan long-term. We cannot think of short-term solutions. And above all, we should not think of military solutions. There are no military solutions to the Middle East, North Africa issues. There have to be political, economic, and social, not military.
This should be a very important question to our e-daily viewers. So during these unpredictable days, what is the best or reliable way to invest money?
Oh, I would hesitate to offer advice, but I would say the following. The fundamentals of investing have not really changed very much. You need to look at countries and sectors that are benefiting from fundamental forces of economic growth, demographics, technology, openness to trade, openness to markets have always played a role. Investment in human capital is critical. So from that point of view, I'm very much in favor of emerging markets. I view the future as being very much in emerging markets. So you should be internationally diversified, but with a large fraction of your portfolio being given to emerging markets. Asia is certainly one of them. Africa is another, quickly developing. Latin America, the countries of the Middle East, North Africa. Central Asia is very neglected. It has recovered well. It is growing very rapidly. And increasingly, if you look at what China is doing, China is developing its infrastructure and logistics towards Central Asia and towards Europe. You now have a railroad reaching Nepal and pipelines reaching Kazakhstan. This will continue. China needs resources, needs energy resources, and therefore it will be continuing to develop its infrastructure. As it develops its infrastructure into Central Asia, this will lead to a transformation of Central Asian economies. And I think they will boom. The same thing is happening in Africa. Large investments are being made in infrastructure in Africa. This will be very positive for the future of the African economies. Many of them are recovering from violence and wars. Look at Sudan. These are all opportunities, really. So don't think short term. Think of the longer term trends of where they're heading. Think of the fundamentals. I'm not an advocate of market timing. I don't think you can really beat the market in terms of market timing. I tend to go more in terms of what are the economic, political, and social fundamentals.
Okay, and lastly, any advice to our eDaily viewers will be greatly appreciated.
First, just a pleasure to be able to communicate to you, and come and visit us. I think is one of the messages. Come to Dubai, come to the Middle East. There are now direct flights to Seoul. I came on a direct flight, so it saves time. Come and discover new culture, new civilization, and above all, I think, given the nature of what you do, yes, use technology, but use it to make new discoveries, particularly find out new areas of the world.
Again, we thank you very much for sharing your insightful comments.
Thank you.
It was great to have you today.
Thank you. Thank you very much.